Great to be catching up again here on the Colour of Country Life, Flow FM with Rabobank analyst Dennis Voznesenski. How are you, Dennis?
I am great. How are you doing, Ricky?
Excellent, thank you. Look, we've been talking for some time about the positive market for Australian farmers. There's been some downturn on the wheat front and even on the canola front as well. Let's focus on wheat to start with, just internationally. Not quite seeing this here in Australia. What's driving the international concerns?
Well, there's three things, Ricky, that I've been seeing and what I've been hearing. The first one is that obviously there's harvest pressure in the Northern Hemisphere. You're starting to harvest in Europe and the Black Sea. The second factor is that there's all these recessionary fears, rising interest rates, and because of that, you've been seeing this cross-commodity decline, whether you look at grains or oilseeds or actual oil, so crude oil, that's all been declining substantially as well. And the last one is that there's been a lot of optimism about possibly exports from Ukraine coming out. So they have those talks in Turkey with Ukraine and Russia, and there seems to be optimism around that, or at least the market thinks there's optimism. But in reality, I don't think it's as optimistic as it seems.
Yeah, I tend to agree with you there. What I'm seeing is it really just the market responding to the latest sort of commentary. We've seen something from the French foreign minister indicating Russia keeps pinning conditions on whether it will actually allow harvested crop to get out of Ukraine. Are we just sort of following, recent commentary with the market rather than actually pricing in realities?
Yeah, it could be just Russia trying to buy time and then in the process of these negotiations actually go and get more land, get more ports in Ukraine and then try to start exporting it itself. When you look at previous wars and the impact on markets, they fluctuate day to day based on what's coming out of the news from the war, whether that's good or bad, but that causes intense volatility in prices. And the fact that it's just dropped from, say, over 1,000 US cents per bushel for Chicago Board of Trade wheat to 800, it doesn't mean that the whole problem's solved. It just means that right now the market thinks that things are a little bit more optimistic, whereas in reality they might not be.
One of those other drivers you mentioned, I guess the northern harvest underway, there was some pretty gloomy expectations out of North America, at least, about how their crop was going. Now that they can get it off, is it actually looking a bit better than it was estimated, say, 3 months ago?
Yeah, it's looking okay. It depends what crops you look at. So corn's looking okay-ish compared to last year, maybe a little bit better. Soy's looking a little bit worse than last year. Wheat's looking okay. So if you look at production, it's actually not so bad compared to last year, despite the dry conditions. If you go to north of America and you go into Canada, their crop production's looking a lot better than last year. So if you remember, their canola production fell to something like 12.5 million tons compared to a normal of 19. And this year it's moving closer towards the high 17 million ton mark.
And just looking at the Australian prices at the moment, I mean, futures is another story, I suppose, but they're still well ahead of where they were in at least the last couple of years. So what's the reason why we're perhaps a bit buffeted from those international trends? Is it just because we've got, just some good quality stuff that we're still pushing through from last harvest?
We do have a lot of good quality stuff. What you have to remember is that we used to be at a large discount to overseas levels. And one of the main reasons, well, there's multiple reasons, but one of the big ones was that we had this really large crop. There wasn't enough capacity to get it out of the country, and hence there was no reason to offer a very high price at port. Now that the assumption could be made that now that there's less grain around, that price slightly went up. And now since global is falling, we still have that kind of buffer between our prices and overseas prices. And even though they've fallen more, we don't need to fall as much, if that makes sense. We're just in a bit of a different market than what's happening globally because we've had those several years of really good production.
Well, we're seeing on the canola front at the Vancouver indicator, the prices dipped below even where it was at the same time last year, but still pretty healthy here in Australia. It is trending down, but it's still well ahead at Kwinana of where it was in the last couple of years.
Yeah, but you have to remember that they still have to harvest in later this year, so they're not harvesting yet in Canada. But when it does get to harvest time, we may see a bit more of a depression for both their prices and our prices. So their prices probably declined in anticipation of that good crop. But if you go to the spot market right now, there's still no Canadian harvest and there's still a deficit of wheat. And that's why our prices could be a bit higher because we can't export that right now, whereas they don't have enough to export.
All right, well, maybe a good time to get in while you can before the Canadians get up and running. Dennis, thanks for that update today. We appreciate your time with us here on Flow and have a great weekend.
You too, Ricky. Bye.